Investors and traders, welcome to the general market chart pattern. Today we'll be taking a look at the key US market indices. This video is for educational purposes only and it is not a financial advice. Just one thing before we proceed, US markets will have a holiday next week. It's the Washington Day. So next Monday, I believe the stock market might be closed. So do keep that in mind. Okay, so we are looking at the daily chart of the S&P 500 E-mini futures. If you have been following our videos, we have been looking at a pattern formation around 4150, which was completed. Since then, the price has been moving in a sideways fashion. Price did pull back right to the 38.2% Fibonacci retracement around the 4050, and it had a good move up, but actually it's really trading sideways. We did have an upside target of 4450, which is this big ABCD. We are watching if the price is able to reach there. However, as we had mentioned before in the video which we did, we do have some timing aspects coming in starting from tomorrow, which is 17th of February, and going up till the 23rd of February, towards the end of this month. And we could see some pullbacks in the market based on some of the timing aspects we are looking at. I'm not going to go into the details of what those are. We just concentrate on the price levels for these videos for the moment. Okay, so if the price does break above this double top formation, in fact it's a triple top coming from the structure here, we do have some upside targets of 4250 and 4300 before we could even speculate that the market would begin to move towards 4450. However, what we have seen today is because of the PPI data which came in stronger than expected, we have seen a fairly decent pullback. And here, one of the key things to remember is we are really watching this 4050 as the key support level for us. If it breaks below this level, then we could be looking for the price to rotate lower. Perhaps it could go and do a correction or a pullback rather to the levels of 50 to 61.8% Fibonacci retracement, or even the entire um, market upside which we have seen since 13th of October last year. And in that case, we have the 38.2% Fibonacci retracement coming around 39.40. That would be the first support level to look at. So for now, I'm just going to delete these levels, because this is an idea we are looking at, and there could then also be a possibility of an ABCD kind of pattern taking us lower. However, that is just a possibility for now, because the key as thing for now to really watch is this support coming from the 38.2% Fibonacci retracement and 50% Fibonacci retracement level confluence level here. That is the key level which we are watching before any further downside can take place, in our opinion. Next one, we are going to take a look at the Russell 2000. So the Russell 2000 is a very interesting one. It had a very nice ABCD formation, right, very close to this double top. In fact, in my books, it is a double top. And then the price pulled back right into the 38.2% Fibonacci retracement of this CD leg right here. And then we have had a movement to the upside, and today the price pulled back, just like we have seen in the S&P 500. However, S&P 500 decline was more, shall we say, dramatic, and then compared to the small caps. So here what we are looking at is, just like the S&P, here I'm going to draw a trend line here. So it could be a bull channel formation here. So what we should watch is if the price is actually going to break below this micro trend line, and if it does, then that is going to be a first indication that price is actually going to go and challenge this key support level of 1906, which is the 38.2% Fibonacci retracement. And on a break of this, then we could have further targets lower. In fact, what we could have is something like this. If that scenario is to take place, we could have a ABCD or one-to-one projection around 1860. And let's take a look at what sort of retracement we'll be looking at, and that is fairly close to the 50% Fibonacci retracement of this CD leg. But for now, I am going to remove that and also this ABCD, because for we take things one step at a time, and the key thing is to watch the trend line and this 38.2% Fibonacci retracement at 1906. On a break of these two aspects, we could then look for further move towards the downside. Onto the upside, if price does in fact begin to break higher and take out these highs, then we had the next levels coming in at 2050 and 2090. Okay, let's move on to um, Dow Jones. So for Dow Jones, if you have been following our videos, we like to take a look at the cash market. We also take a look at the YM futures, but for Dow Jones, the cash market is more important in our opinion, or at least the way we like to analyze the markets. So here we were initially looking for an ABCD or a one-to-one movement higher, which was going to take us to this double top formation. However, we noticed that the market in fact had been moving in this pennant formation and was finding quite a lot of resistance here. In fact, on Tuesday, 14th of February, we have seen this double top formation, and price just moving sideways to lower today, taking out the lows of the 14th of February. It's quite something to make a note of. And here again, there's a chance that the formation which we are looking at is kind of this beginning of a H kind of a formation. What do I mean by that? Let me try drawing something for you. So it's like oops it's like we have this arc formation forming here, and then if it takes this low out, then we could have further downside targets. So this is what we are watching in the Dow Jones Industrial. Let's quickly take a look at the YM futures as well. So similar kind of pattern, we were looking for ABCD one-to-one projection for a double top, potential double top here. However, the market is just finding resistance here. The key level to watch is going to be around 33 33,383 as the next key level to watch. Okay, let's take a look at the Nasdaq futures, Nasdaq 100 futures. So here the Nasdaq is actually quite interesting because it actually completed our ABCD target around 12,600. However, the price action was pretty strong after that, and we were anticipating the market would actually move higher right into the 78.6% Fibonacci retracement, and we had further resistance coming in between 13,070 and 13,275. However, that has not materialized yet, and the market keeps on moving in sideways. And here, something interesting to note is that after finding support around the 38.2% Fibonacci retracement of this smaller CD, smaller leg within the CD leg, the market today had a big pullback here. And here for us, the important point to note is this support coming from here, which is also the structural support coming from this part. Let me try drawing a horizontal line here. So here we go. So around roughly 12,300. On a break below 12,300, then what we could anticipate is perhaps the market is moving in a structure one to one, where we could have ABCD or one to one projection around 12,060 level. And let's see if there is some other confluence coming from some Fibonacci retracement. And right here we will also have around 12,100, the 38.2% Fibonacci retracement of the entire CD leg. So these confluence points could mark this as an important level to watch. However, I'm going to delete this for now, and the reason is that we'll take things one by one, and we'll just watch for whether this 12,300 level is breached to the downside. And there could be possibility of that, because as we mentioned before at the beginning of the video, we are watching for some aspects starting from 17th of February, and we have other cycles coming in till 23rd of February, so we could see some pullback in the markets. And if you have seen the video which we did for the key stocks that we follow, which are all in the Nasdaq 100, then you would notice that those stocks are also reaching key pattern formations, and actually kind of have stalled at certain levels which we had forecasted, and they seem to be finding resistance and struggling to move higher to break out of those levels. So that's another thing to watch in order to combine all these things together to analyze and perhaps kind of anticipate and forecast what the market might likely to be doing next. So this is what we are watching in the major US stock indices. If you like our analysis, how we look at the markets, how we identify key pattern formations, and we make use of Fibonacci retracements and projections and expansion levels, then please do subscribe to the channel. If you like the video, then please smash the like button. That way I know that people do find this material good from an educational perspective, and it just encourages me to make more videos and bring out more content, and also look in the future I will be following other markets on which I have not been doing a lot of coverage, for example the US Treasury bond markets, the US Treasury note market, and also will this year we'll begin to also take a look at certain commodities, grain markets, and certain soft commodities as well, because if inflation persists, there is a good chance that we are going to see nice moves in the commodity markets, which are actually real things people have to buy. The governments have to buy. Big companies have to buy these commodities to manufacture things, to feed things to the livestock. So there is really demand for these real things, and commodity markets often overlooked. Could actually be fantastic markets to look at, especially when they begin to trend. Then they begin to trend quite nicely. Also, I will be beginning to cover on regular basis certain forex market and forex pairs, because I believe forex market is going to be one of the key markets to look at, in terms of there's going to be movement coming in those markets, and also of course the forex market is the biggest market in the world. There are about five, I believe, I could be wrong on that, don't quote me, about $5 to $7 trillion traded on a daily basis. Is a huge market, and certain currency pairs, for example, Euro USD, they follow the Fibonacci levels and the pattern formations really well. So I will try to cover more of those as well, and bring it those videos out for you guys. So thank you very much for watching. If you like our videos and our channel, please do subscribe. Also hit that bell icon button, that way you will know when the new videos are posted. Apologies, the video got really long, so I will not take further time. Thank you very much. Good luck and good trading.